So we have the White House now announcing 25% tariffs on all cars not made in the United States. Well, the VIX breaking a losing streak, trying to bounce off the 200 period, tried to get back above the 50, the green line there, couldn't do it. If we see the VIX spike back up, the S&P could still go and take out this low and forming a divergence on the awesome oscillator, the RSI, and the MACD. The daily time frame. If you get above the 50, volatility will return. If we hold below the 50, then we might try to bottom out. I'm continuing to watch the gap fill area, and do we back test and get a higher low, back test a trend line, or have we not bottomed yet? We make a move to try to take out the support zone. MACD is going negative, but the stochastic's oversold and turning back up. So again, going to be watching. Do we end up trying to go back up? Sometimes if we do end up making a lower low, if it's not done yet, again, oftentimes the VIX will top before the S&P bottoms. I've talked about that. So if we do end up getting a divergence on the RSI and the awesome oscillator, then we may see the VIX come up here and set up a lower high, and that would mark a bottom should that scenario end up playing out. Now, after dropping 10.5%, we've rebounded up just over 5% off of the low, but so far we haven't even gotten a 50% retracement or moved back towards the golden pocket. So the retracement has been feeble. If I bring up the 38.2 Fibonacci, we've just overthrown the 38.2 Fibonacci, but didn't quite reach that 50% retracement. And again, stalling at horizontal resistance with a possible evening star 3-day candle pattern. Before the sell-off, right at the open there, as we opened up, we were starting to see a bullish move here from risk off to risk on. It was canceled out by the end of the day with the sell-off. We still have the risk line bullish with the gap higher there on a Monday. We did try to see the trend try to change, and today with the sell-off, it flipped right back. So again, in order to turn things around from the risk-off environment signal that we had back over here, we've got to move to risk on, and we've got to see the rally continue. If we move back to form a divergence, you could end up seeing a divergence develop with risk off, making a lower high as price moves to a lower low in the S&P. That's certainly possible if we start seeing divergences develop on the RSI, the awesome oscillator, and the MACD. Watching this to see, and if we can rally in order to get back and hold above that 200 period on the S&P 500 and get it back above it on the NASDAQ, we've got to see risk model move back into a risk-on environment. Got to go here and get green. We're seeing volatility increase, and we're seeing a risk-on or risk-off environment, I should say, here in the S&P 500. We've seen a little green here intraday. We saw a little bit of green. Told you, is it going to be like something like what we had over here where we get some green, but then it flips back to red, and we end up forming divergences like right here. Intraday, we could end up forming a divergence. I talked about this. So again, or confirm a higher low. But right now, S&P struggling at that 200 period moving average. We're getting rejection here off of the cloud. You got to be able to clear that cloud in order to turn this around. We tried it a couple of times over here and it failed. Finally did it here, but it didn't last very long, and that gave us the topping process at the trend line from the December and January highs. Still hanging in here intraday, but again, that could change. The signal could change. So trying to get green bars and the green background and the blue line. If we start moving towards the support zone, the signals could quickly change intraday. In the daily time frame, again, we've tried to see some momentum flip, but we're struggling. The bars are still red. You got to be able to clear the cloud here and get rid of all this red and see everything go back to green if we're going to try to turn this around. Momentum has tried to turn here a little bit, but there's a lot more work to be done if the bulls are going to flip this back to bullish. The risk is that we, again, go down, back test the trend line and fill the gap, or try to take out the low over here, as we've talked about both of those scenarios. For the S&P to go higher, we got to see green bars. We've got to, for the trend, we've got to see the red go away and green appear. We got to take out the upper boundary, the cloud up here. Been talking about those two scenarios. I'll talk a little bit more about it, but again, the blue count, is this wave 4 and we get wave 5? Or have we bottomed and we're starting a new rally where these lows from March 13th are going to hold. But I keep saying it again, could we end up seeing countries in the European Union, other countries, could we see countries come to the negotiating table and the market starts getting hope? Also, remember, we still could see hope with the tax cuts. That's going to be coming down the pike here. Renewing the 2017 tax cuts and then the new ones. No tax on Social Security, no tax on tips, no tax on overtime. Could we eventually see a rally with that? We'll see what happens. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel. If you could take a moment to do that, I would really, really appreciate it. It takes a lot of time and effort to do this. I don't want sponsors. I turn those offers down because I don't want to sell you stuff. But I need to hear from you in order to make that work. So if you could take a moment to respond, I would really, really appreciate it. Just follow the link below to take you to a secured site and you can donate any amount you want. Make it a recurring donation. If you do that, I thank you. But please consider helping out and sponsoring the channel today. Again, we've had a bullish reversal of conditions. Momentum is bullish. Return. We've seen a 5% plus rally. We've come up to the 200 period. Now we're going to get rejection and come down, either get another higher low or maybe get some red bars and confirm a higher low, or start seeing bars go into positive territory, or do we end up forming a divergence as we get closer and closer to April 2nd and we end up undercutting this low and end up forming a divergence for a bottom? Same thing with the MACD. So I've been talking about the Awesome Oscillator, the RSI, and the MACD. Go higher, we've got to close back above the 200 and then be able to stay above it. Bitcoin struggled at the 200 period moving average, pulled back, got above it, dropped back below it, and then eventually Bitcoin got back above it. It's still above it right now. We'll see if the S&P does something similar to that. We have to go back and form a divergence. Again, NASDAQ's getting rejection off that 200 period. Same thing here. Are we going to end up forming a divergence, undercutting the low down over here? Maybe getting it on the MACD, or again, can we see the momentum remain bullish? Does it flip back to bearish? Do we start taking out the 10 period? Do we start taking out the lower boundary of the cloud and losing the support zone, which I'm talking about in this video? So again, I'll be watching the 10 period moving average. I'll be watching to see, does the NASDAQ do what Bitcoin did and just struggle at the 200 and eventually get back above it? Or again, does it go make a new low, end up forming a divergence before all is said and done? Again, do Awesome Oscillator bars eventually go positive and go green? Do we see a new low and volatility as we move into next week, but then form bullish divergences and something happens? Maybe again, Europe comes to the negotiating table. Maybe Trump delays the tariffs. Trump's probably going to do retaliatory tariffs. Do they just double down on it? Market freaks out and then Europe caves. We see negotiations, and then we get a rally of hope. We'll see how it unfolds. It can unfold a couple of different ways, but we're likely going to see negotiations. Too bad that Europe can't come to the negotiating table before Trump slaps the tariffs on. We got Germany with really weak GDP. Do retaliatory tariffs, and Trump just slaps them. I mean, they're going to push themselves right into recession immediately. They should already be at the negotiating table. Said if Europe hates tariffs so bad, then why are their tariffs so high? We'll be watching the Awesome Oscillators, the MACDs, and the RSIs. Okay, Wall Street not happy as Trump about to announce new auto tariffs again. Earlier in the week, starting to sound like he was walking back the tariffs. The reciprocal tariffs that are coming April 2nd sounded a little bit like he was starting to walk those back, and then we get an announcement of the auto tariffs about to be announced here. The Dow was down 0.31%, down 133 points almost. The S&P down just over 1%, down 1.12%, down 64.5 points to close at 57.12. The NASDAQ down just over 2%. We're down a little bit lower on the S&P and NASDAQ. We rebounded off the lows a little bit. Russell was down 1%. The VIX was up 6.88% today. The VIX was actually up over 10% at the highs of the session. It didn't close there. Wall Street not happy about the new auto tariffs. Now, 1 week from now, April 2nd, we have the reciprocal tariffs. What happens? We're at extreme fear. Now we're just at fear. Fear greed index did form a divergence. It did form a divergence with the S&P at the recent low. It did form this little tiny divergence at the March low. The S&P went a little bit lower. The fear greed index did not. Could get a larger divergence. RSI did the same thing. It formed a little tiny divergence, and then again, it's still at risk of forming a larger one. But again, just moving off of levels of extreme fear and currently at fear. Last week, we had the sentiment show that we're at a level of 58.16% with the bears, 21.6% for the bulls. We'll get the new data tomorrow on where we stand with sentiment. It'll probably be another very negative number. These are the kinds of readings develop surrounding a bottom. The S&P 15-minute chart, again, we came up to this trend line right here. We stalled. We couldn't go up. Again, I had drawn a parallel boundary to this. It's not parallel. It's more of a rising wedge-looking pattern rather than a bear flag. If it breaks down, then we can come back and fill the gap here and test the low. That was the bearish scenario where we go make new lows. We start breaking down. If we get another push higher, and we end up getting a parallel boundary to the lower boundary here. We get a parallel boundary up here, and we come back and fill this gap, and then we go down. That's a bearish scenario that we try to take out this low. I've talked about 3 scenarios where we take out the low, where we come back and we fill this gap, which we're moving towards right now. And then the third is that we just keep going. But either going up and filling this gap and coming back down and trying to fill this other one, or trying to fill this gap right here. So we're watching that. Here on the 15-minute chart, we're coming to the 200. We're just above the trend line right here. We'll see what happens. We became oversold at the lows of the session on the RSI. The Class B diversions up here, 2 equal peaks on the indicator. Higher price on the S&P has given us a sell-off. So now we're becoming oversold. We'll be watching, again, do we break this trend line? Do we break the 200? And again, moving into the support zone right here. And if we do, then this gap and taking out the lows then comes into play. Here it is on the 60-minute chart. And again, here's the boundaries, the lower boundary, the upper boundary. If we bounce off the 50 here, again, there's still risk of getting rejection around the 200 and this gap fill at 58.43. And if we did get rejection there, then you would have a parallel boundary, perfectly parallel with the lower boundary, a possible bear flag in play there. Move towards April 2nd. So again, that's the possibility of a bear flag forming. But right now it's more of a rising wedge kind of a looking pattern. And again, right here you have at the trend line, you have the gap fill right here at 56.67. I'll be watching that. We're at the 50 right here. We're at the 200 there on the 15-minute chart. We're still in positive territory with the MACD. The RSI broke 50. Again, can it come back up here and end up diverging? Fill this gap, back test this trend line. I've been talking about that possibility that we come back and we end up back testing the trend line, and then we come back up, and that's get the higher low scenario. We're going to break down right here, right now. And the gap over here from the start of the week is a gap and trap, where we gap and then we move in the other direction and we come and undercut this low. So those are the possibilities. Again, right now, we still have the 50 below the 200 period. The black line is the 200. And again, prices come back to the 50. So again, we've got to get back above the 200 if things are going to turn back to bullish. And then you got to get the 50 back above the 200 period moving average. So just watching to see what would happen with these gaps, which one would get filled first. And then again, if we came back and filled this one right here, do we just back test? Is it a gap and trap from Monday's high? And we're now going to go down and take out the support zone and take out this low. So again, watching these levels. And I think we're in a bottoming process, but I have 2 different scenarios. I drew the scenarios out here. Again, one is that we've had this 5-leg push lower in this larger ABC, and this is a 60-minute chart again for an A, B, and this whole thing is C, and that we've now bottomed, and we're now starting intermediate wave 5, first minor wave, and we have the first, minor wave under construction with these smaller waves. Scenarios that we did not finish the wave C, and that wave minor intermediate wave 4 is still under construction, and that we have the blue count where this is 3. This is now an ABC for 4, and we're now getting 5, and we're going to undercut this low and end up forming divergences on things like the RSI and the daily time frame, the awesome oscillator, and the MACD, the things I've been talking about. So those are the scenarios. Now the herd has gotten very, very bearish right here. The bears are telling us there's no way we're going to rebound. Well, we have rebounded, and we've rebounded about 5%, over 5% from that low. They're dropping 10.5%. From that low point, we've rebounded about just over 5%. We were told there was no way that possibly was going to happen, but yet it did. So again, we're going to be watching to see what happens here. Even if we go, the bears are telling us that the bottom is about to fall out of the stock market. If we do go higher, they're going to be yelling counter trend, which they're telling us isn't going to happen. And they told us this rally so far that we've had back to the 200. I told you down over here, we're going to rally to the 200-day in the daily time frame. What happened? We rallied up to the 200-day in the daily time frame. Now it's the waiting game. You got to be able to get back above the 200, stay above it. We dropped back below it today. We're going to be watching the gap and the trend line. But S&P 60-minute chart, I've got the blue count here. I've got the black count. The black count says we've already bottomed and we're just coming back, pull back. The blue count says we haven't bottomed yet, but we've got a bottom under construction. Again, this does look corrective to me. An expanded flat. You've got a 3-3-5 pattern, an ABC followed by a 5-leg push lower that may or may not be done. That's corrective. Again, as I've said over the weekend, I believe this is a preview of coming attractions. I believe that we're going to do what nobody thinks we're going to do, and that is go make new highs. And some people that are visiting us from another planet that are telling us, oh, no, everybody thinks that. Nobody thinks that. You just saw the sentiment. You just saw we've just moved off of extreme fear. The majority of traders and investors are extremely bearish and have lost hope. And I told you we're going to get this rally of hope. We had a rally on Monday, a rally of hope. And I think we're going to see that continue either with a higher low scenario or this lower low scenario. We lost the 200 period moving average today on the S&P. The NASDAQ got rejection at the 200 period. The S&P had gotten above it. We dropped back below it. We now have a possible evening star. An evening star is a wide range bar followed by a candle of indecision or a small real body, a spinning topper doji here, a doji, and then it's followed by a wide range red bar. So the risk is that we get a bigger sell-off. Candlesticks mean nothing unless they get confirmed. We have to confirm by closing below the low of today's low, the low of the 3-day pattern, and then you get a follow through. So again, the risk is that we come back down and take out this low, or again, drop further, but don't take out that low and fill the gap right here. So again, we'll be watching to see if the pattern is confirmed. If we get back above the 200 period, it could cancel out the pattern. So we'll be watching. If we do go lower and we end up taking out this low, then the RSI, as I've said, could form a divergence. We had a little tiny one right here, just like what we had, little tiny one right there, just like what we had on the Fear Greed Index. And we had it on a couple of indicators. Now here we have gotten above the 200. That got us above the momentum cloud. We're still holding above it. We lose the momentum cloud. Then again, you're going to test the support zone here. The risk is that we take it out to fill the gap over here. So we'll be watching to see which way this unfolds. The RSI has to get back above 50 if we're not going to form the divergence. The risk is that this is corrective in an ABC. Now the MACD could do the same thing. It could end up forming a divergence if we roll over. If it remains positive above the signal line, then again, we got to be able to get back above the 200 period. Now I told you we were at the January low over here, which is horizontal resistance. We stalled there, and we stalled just above our 200 period moving average. This is resistance. Also the trend line from the highs back in December, this trend line right here, we came down and again it acted as support here and here and here, tried to bounce off of it, and then we broke it. Here it became resistance, and here it became resistance. So this trend line is now resistance and intersecting with horizontal resistance. So that's the resistance we're running into right now. If we can clear this level, you've got your 50 period, the green line, and the 100 period up here, and we have that gap fill right here, and the trending cloud of resistance. Stochastic still pointing up at this point. It didn't roll over today. So again, going to be watching the gap fill area. Do we end up dropping below the 10-period moving average? We're still above it. And if we do we take out the support zone? If we can just fill the gap and you can try to bounce off that trend line right there at the 10-period moving average, should we just fill the gap and try to rebound? Again, the risk is that we still have under construction a larger bear flag, even if we go higher to the 200 period on the 60-minute chart as we looked at earlier. So again, right now turning down off of this resistance area that I've talked about. Clear that if we're going to go higher. If we turn lower, we'll be watching to see where the dust settles here. Do we form a divergence or not, or just fill the gap and back test the trend line? Again, I showed you the trend line here in the 60-minute time frame. Let's look at it in the daily time frame. The risk is that we're back testing that or we get something uglier. If we can bounce off the 50, then again, we'll be watching to see if we can get back above the 200 or not. Should we hold above that 50-period moving average, but you have that gap fill at 56.67 just below it. Look at the daily here. Here's the trend line here in the 60-minute time frame. Here it is in the daily. And again, if we fill the gap, we could just be back testing this level and then go on our way and try to rebound if we have a back test. Bitcoin broke out of a trend line as well. Could be in back test mode right now as well. Watching these trend lines with great interest. But keep your eye on these gaps. Again, 56.67 down here near our 10-period moving average. Up here, 58.43. Again, we've had a 5% move higher after dropping 10.5%. So again, we'll be watching both of these gaps with great interest. I want to continue to point out we found support at this 50 period on the 60-minute chart previously, and we formed this little divergence right here in the MACD, and we hit it a second time when we bounced, and we got that gap on Monday, and now we're back at the 50 again. If we're trying to backtest this trend line, our cloud is right there at the gap fill as well, our gap fill and potential backtest of the trend line. If you lose this area, if you lose the cloud, here in the 60-minute time frame, then again you're losing the horizontal support zone here, the upper boundary of it, and again you're going to be falling back into the support zone if you lose that cloud area. So again, going to be watching this area with great interest. Do we try to bounce off the 50 and go test the 200, or do we come back, fill the gap and try to bounce and back test, or do we try to break this area and go back and try to take out this low? We'll be watching this cloud going into tomorrow's session very closely. For the bigger picture, I think there's two possibilities. One possibility is we've already topped and we have completed primary wave 5, and we've had the 1, 2 for the intermediate waves, 3, 4, and right here we've had 5 minor waves to complete intermediate wave 5, and that completed primary wave 5 and completed the cycle top, and that's it. So that's the bearish count. That we've had a truncated fifth with our minor wave, and we're now done with the bull market. That's the bearish scenario. In order to validate something like that, we got to see the MACD go negative and remain in negative territory. We got to see the RSI stay below 50, stay consistently below the 20-week moving average, the blue line. The bullish scenario, say we haven't topped yet, but once we do, then that's going to be the final curtain. Same thing over here. Primary wave 4 finished here. This whole thing's primary wave 5, and it's not done. We have intermediate wave 1, 2. This whole thing is 3, and then we now have A, B, and C, and either it's done or about to finish, and then you're going to get your final intermediate wave 5 higher that's going to unfold in 5 primary waves. 5 minor waves, I'm sorry. This scenario would suggest that we get this volatility like we did in 2000 and 2007 ahead of the final blow off top. That's followed by a 20% crash to kick off the bear market. The Fed panics, we get the emergency cuts, get a bounce, and then the bottom falls out of the stock market. Regardless of which way it plays out, again, that's where we're headed. We're moving towards a bear market. We're moving towards recession. So again, do we have a bottoming tail here? We're still above the 50-week moving average. Do we have a bottoming tail that will end up being confirmed? Now, at the highs of the session here for the week, at the beginning of the week, we saw push higher. How do we close the week out? But this is the bullish scenario that the move's not done yet, but again, I am looking for a bear market, but wanted to show you both of those long-term counts. Got that hammer in the weekly time frame here. It is up close so you can see it. We got that bullish hammer, okay? And then we got the candle of indecision in the form of a spinning top in the weekly time frame here. This is a weekly time frame of the S&P 500. Got the candle of indecision, okay? And it didn't confirm the previous bottoming tail. Now we've been doing it, but right now we're kind of right back at this area right here, giving back the gains from the earlier in the week, moving back to possibly fill the gap or to resume the decline, one or the other. Watching, do we get a strong close? Do we get a weak close? You know, right now you've got a low topping tail here. How do we close by the end of the week? Will this candlestick be confirmed, which it was not confirmed last week here in the weekly time frame? Again, candlesticks have to be confirmed. Bottoming tails, we were going down right here, but it never got confirmed, and you just kept going. We have a topping tail by the end of the week, as we had a bottoming tail by the end of this week. Does the seasonality kick in? So far, it's been very interesting. It showed a January bottom. We got that, a January bottom. We rallied up, we got a January high, and then we went higher, and we got a February high, which, again, February 19th, very close. Then we recently bottomed here in early March, the March 13th date, very similar to this. So, again, do we see the seasonality continue to play out? We'll see what happens. Stop making new highs now, or if we go higher, we stop making new highs, then the rest of this may not play out. But so far, the beginning of the year, here in the first quarter, so far, things seem to be playing out accordingly. So we'll be watching this carefully. Back to the weekly chart, we'll be watching, do we get a close above this previous level right here? And right now, again, let me draw that straighter. We're just pretty much right at that level. And again, I'll be watching the monthly close as well. A topping tail in the form of a doji spinning top looking candlestick here on the S&P 500 monthly. Will it be confirmed by the end of the month? Same thing for the NASDAQ monthly chart. NASDAQ had the topping tail in December, rallied back up, got a lower high, had a candle of indecision, and then we went to a new high in February. But another topping tail. We ended up selling off, and then again, right now, we're below that level. Are we going to confirm that by the end of the month or not? Or does the seasonality end up taking us higher? Surrounding the tariffs right now, the sentiment is extremely negative. Could we see a hope rally? Could there be hope of negotiations? Hope that Trump walks the tariffs back further? It seems to be that he is doing that a little bit with our tariffs coming on board here for April 2nd. We had the rally on Monday. Mixed messages. We now get the auto tariffs here. Watching to see how all of this unfolds. Something happened to give the market hope. Very well could. This sentiment is extremely bearish. The negativity, and we've been at extreme fear. Now we're moving off of that just a little bit with this rally, but we're still at fear. Watching these monthly charts, this is a NASDAQ monthly chart. Now, same thing here for the NASDAQ as the S&P. Again, we've had this rally up. Got it back above the 50, been finding support around the 50. Here we are at the 50 again. Right below it is our gap fill from Monday's gap higher. We have a little gap from today, and then we have the gap over here previously from earlier in March. So do we come back up to that 200 for a test and try to fill this gap? And if so, again, do we still end up forming a bear flag that pushes us down to take out that low? We've had the bullish divergence give the NASDAQ a rebound. And if I just bring it up here, we've seen the NASDAQ off of the lows rally 6%, S&P just over 5%. So again, we'll be watching. What happens here at this gap? What happens at this gap fill area right here? What happens at our cloud? And again, same thing as I said with the S&P. You've got the support zone directly below the cloud. So if we take out the cloud, you're coming into that support zone. Taking that level out would be bearish. But if we get a higher low, we have to get back above the 200 and eventually get the 50 back above the 200 to turn this around. So a couple gaps overhead today, and then previously earlier in March, and then the gap from Monday, and down over here the gap from the bottom. So a couple of different gaps that I'm looking at here on the NASDAQ. Here's where we're at on the daily chart. We went up to the 200. I told you back over here we were going to rally towards these 200 period moving averages, and we did. NASDAQ came up to it and got rejection. The S&P came up and overthrew it and then turned and closed back below it. We had these failed breakouts back up here, and we've turned down, dropped below the 200 period moving average, coming back to fill the gap from the Fed pivot back way back over here in September. And that's where we bottomed out, at least so far. And now we're trying to rebound. We are holding, just like the S&P, above the 10 period moving average. We broke back below the 20 after getting above it, getting rejection at our 200 period moving average. If we can clear this area or pull back and get a higher low and end up clearing the 200 period, then we have our 50, our 200 period, and again, our cloud of resistance, just like the S&P. The risk is that we end up forming a divergence right here that, again, we had this little tiny divergence right here, but it could evolve into a larger divergence before all is said and done, and we could end up coming down and then coming back up. And again, you could even see a bottoming tail if that scenario plays out, or again, as we move into next week towards the April 2nd day when the tariffs are supposed to roll out. So we'll be watching all of this closely. The RSI back above 50 here, same thing I said on the S&P, that would be a sign of strength if you can get above the 200 and you can get back up there. If we can get a big rally back up to these 50 periods, then you could get volatility there and then try to clear them. What happened in 2000 and 2007, but it's not certain that this low is going to hold, because we still might get this divergence on the RSI, the MACD, and the awesome oscillator. Here's the MACD turning back up, our stochastic still pointing up. So again, we're going to be watching, do we end up forming divergences, or can we validate a higher low but getting back above these 200 period moving averages and staying above them? NVIDIA weight on the NASDAQ today, it dropped 5.74%. Again, we had this divergence at the low, this really Class B divergence. From the lower high, we dropped nearly 27%. So again, we're watching. As we're dropping, we're getting the 10 back above the 20 period moving average here on NVIDIA. Bitcoin's doing the same thing. They both have possible bull flags, although again, NVIDIA turned off a major resistance up here. I've talked about that at great length and detail. So again, just something we're paying attention to. We've had our death cross as well, which is not good for NVIDIA. But Bitcoin's done the same thing. It got back above the 200 period here. NVIDIA is still below it, but you're getting the 10 back above the 20 period. That's what NVIDIA is doing right now. So kind of interesting there. Bitcoin daily chart right here.